Hey there. So let's chat about Nevada, a place many of us have always thought of as a land full of chances, no state income tax, loads of sunshine, and neighbors with California's glitz. But here's the scoop. The real estate market and the local economy are facing some serious trouble. What was once the go-to spot for California dreamers hoping to snag the American dream is now morphing into something quite different. By 2025, it could turn into a real nightmare. If you own property in Nevada or are thinking about buying, listen up because what I'm about to share could really shake things up for you. We're looking at 10 housing markets in Nevada teetering on the edge of a cliff. And I mean a full-on cliff, not just a little dip. We're talking about neighborhoods where home values could drop sharply. Picture entire areas where equity might disappear faster than water in the Mojave Desert, with for sale signs popping up like tumbleweeds. Imagine that $600,000 home you bought last year might only be worth around $450,000 by Christmas. This isn't just me guessing, it's reality hitting hard. I want you to stay alert and get involved. Share your thoughts in the comments as we go along, and let's help each other out with plans for the next few years. All right, let's dive into those 10 Nevada real estate markets that are about to face some heavy losses. Kicking things off at number 10 is Summerlin South in Las Vegas. This place has been like the golden star of Vegas suburbs, home to tech executives and retired CEOs living in their dream homes. But come January 2025, this paradise might start to fade. Home values shot up a whopping 47% in just 3 years, with median prices hitting $725,000 for a desert suburb. Now, there's too much inventory piling up. Think poker chips after a bad game. The average days a home is sitting on the market have jumped from 18 to 54. Price cuts are happening left and right, with 31% of homes slashing their prices, some by $100,000 or more. The big change? Those California buyers who drove the prices up have pretty much stopped coming. With remote work winding down, companies want employees back in the office, which leaves that Summerlin dream home turning into something stressful, financially speaking. Mortgage payments that once made sense based on tech salaries aren't cutting it with Nevada's average wage around $52,000. If you bought there in 2023, chances are you're already in deep water and it's getting deeper. Next up at number 9, we have Spanish Springs in Reno, which used to be the shining star of the area, seeing tons of new construction and young families moving in. It's been wild watching the real estate scene around here. Quarterly home values are up by 8%, but just recently, Tesla made a big announcement about layoffs, 6,000 jobs gone. The gigafactory that was meant to boost Nevada's economy is losing workers fast. And guess where the fallout is hitting hardest? Spanish Springs, where a lot of Tesla folks made their homes. Builders can't keep up. There are 178 new homes just sitting empty. They're trying to entice buyers with $50,000 in incentives, free upgrades, and mortgage buys. It's like desperation dressed up as opportunity. Usually, the spring market jumps in to save the day after a slow winter, but that's not happening this year. Pending sales are down a staggering 43% compared to last year. This isn't just a minor hiccup, it's a full-on catastrophe. What really tugs at my heartstrings is thinking about the good, hard-working families caught in this mess. They've been saving for down payments, painting nurseries, and planting gardens, only to see their equity vanish. Now they're sitting there wondering if they should have just stayed in that tiny California apartment. Let's talk about Enterprise in Las Vegas, a spot where locals actually live. It's not all glitz and glamour, it's just regular folks trying to build their lives. But that's becoming tougher, as the median home price shot up from $285,000 to $465,000 in just 4 years. Meanwhile, local wages haven't really budged. The teachers, firefighters, and nurses who keep Vegas running are being priced out of their own communities. Now, investor activity, which made up 34% of sales, has dropped off the map. Why? Rental yields have taken a nosedive. Those $2,800 monthly rents have dipped to around $2,100 and still falling. The numbers just don't add up anymore. So investors are trying to unload properties all at once, leading to an avalanche of homes hitting the market while demand shrinks. We've got 6 months worth of inventory now. In 2021, it was just 2 weeks. That's not just a flip, It's a dramatic change in fortune. Now, about Mountain's Edge in Las Vegas. This place was supposedly all about affordable luxury, but what's happening? Homes that were going for $350,000 in 2019 are now up to $580,000 by 2023. And many of those casino workers, they're still making $18 an hour. The math has never worked, and now it's painfully clear. Foreclosure notices are up by 67%. These aren't just speculators, these are families facing some tough times. A lot of folks really went for their slice of the American dream with creative financing, adjustable rates, and maxing out their leverage. But now, with interest rates sitting at 7.5%, those adjustable mortgages are making some serious adjustments. People are seeing their monthly payments jump from $2,400 to $3,600, and their incomes haven't budged at all. It's heartbreaking. If you take a drive through Mountain's Edge on a Sunday, you'll notice all the moving trucks. These aren't people upgrading, they're evacuating. Now, let's talk about North Las Vegas. It used to be the working class heart of southern Nevada, where Amazon workers and hospital staff squeezed every dollar to buy homes, thinking it would be the next big boom area. Instead, it's becoming the center of the bust. We're seeing crime rates jumping by 23% year over year, schools are losing funding, and city services are getting cut. Property values have taken a nosedive, plummeting by 12% in just 6 months. That's like $50,000 in equity just disappearing from the average home. It's like it never happened. And the saddest part? North Las Vegas has the highest concentration of FHA loans in Nevada. These first-time buyers only put down 3.5%, and now they're underwater, trapped in their homes. They can't sell, they can't refinance, and they can't even move to find better jobs. The American dream is turning into an American trap. If you're finding this information valuable and a bit alarming, make sure you hit that subscribe button because what's going on in Nevada is a warning for housing markets all across America, and you'll want to be ready. Let's shift gears to Whitney Ranch in Henderson. This area was where young professionals built their starter homes, the affordable side of Henderson. Or at least, that's what we thought, because affordable is a tricky word these days. Homes are now sitting on the market for an average of 73 days. Last year, that was just 11 days. We're not seeing a slowdown, it's a freeze. Open houses that used to attract crowds feel like ghost towns now. Realtors are left sipping their coffee, checking their phones, and wondering where all the buyers have gone. The reality is, people can't qualify for loans anymore. That $425,000 house needs an $85,000 income. And with the median income in Henderson at only $68,000, it just doesn't add up, especially if you're considering perfect credit, no other debt, and maybe a touch of luck. The pool of qualified buyers has shrunk by 60%. Whitney Ranch is becoming a glaring example of how we overshot the market when money was cheap. But now, with rising fears taking over speculation, it's a tough situation. Then there's Aliante in North Las Vegas. Aliante was the escape hatch for many, with its master-planned gated communities offering safety and peace of mind. So, let's chat about some pretty wild stuff happening in Nevada's real estate markets. To start, I want to focus on Anthem Henderson, a beautiful country club area where folks built their dream homes. Think stunning golf courses and breathtaking mountain views. But guess what? The cost of living there is going through the roof. HOA fees have shot up from $185 to $380 a month. And if you own a $1 million home, you're looking at property taxes around $15,000 each year. Insurance costs? They're doubling too. Even people with decent incomes are feeling the squeeze. And the high earners? They're vanishing, thanks to tech layoffs affecting remote workers and casino exec positions being cut. This is causing the professional crowd that once kept Anthem's prices steady to dwindle, while the costs keep rising. Now, shifting gears to Silverado Ranch in Las Vegas. This neighborhood used to be the go-to for locals wanting to show they've made it, but now, it seems like they're heading out instead. Luxury rentals are facing staggering 28% vacancy rates. Investors, hoping to rent out properties for around $3,500 a month, are slashing prices down to $20,400 and still struggling to find tenants. The short-term rental scene that boomed during COVID is now crashing hard, with Airbnb bookings plunging by 45% and VBO occupancy running really low. A huge chunk of this market, about 38%, is held by investors who are stressing out, and when they panic sell, it drags down housing prices for everyone else. The heartbreaking part? Regular families who just wanted a good home and safe streets are caught in the crossfire of these investors' bad gambles. Finally, let's talk about the insane situation with new construction. Out here, builders have been going all out, pushing up to 1,200 new homes in just 24 months, while this area usually only takes around 200 homes each year. It was like a party with everyone celebrating high demand, but that fun stopped when interest rates went up. Now we've got empty houses for blocks, brand new and never lived in, dropping in price each week. Builders are getting desperate. Leonard is offering $40,000 credits, KB Home is throwing in free solar, and Beazer is including appliances, landscaping, and window treatments. When builders start giving away everything, you know something's off. The inventory situation is a disaster, sitting at 18 months at the current absorption rate, while markets usually crash at around 6 months. This isn't just a regular market correction, it feels more like a reckoning is on the way. Hey folks, let's chat about the luxury home market in Nevada. It's pretty wild right now. Homes over $1 million are sitting on the market for an average of 147 days, and some are even stuck there for over 200 days. We're seeing some massive price cuts, like $200,000 to $300,000. It's desperate times at the higher end of things, and when luxury homes take a hit, you can bet the lower-priced homes will follow suit. Take Inspirada in Henderson, for example. This place was supposed to be the shining star of master-planned communities, where Nevada's future was all about growth and opportunity. But now it's turning into the epicenter of housing trouble. They expanded way too quickly. 3,000 new homes in just 3 years. The infrastructure just can't keep up. Schools are overflowing and traffic is a nightmare. What was once sold as paradise is now starting to look like a logistical disaster, and buyers are pulling out at alarming rates, with cancellation rates on new builds hitting 40%. Now here's the kicker. Inspirada has the highest number of recent buyers who went for adjustable rate mortgages, second mortgages, and borrowed their down payments. That means their equity is super thin, and they're facing a market that's in free fall. We could see home values drop by 30 to 35% from their peak, which translates to about a $200,000 equity wipeout on the average home. This whole situation is really heartbreaking. We're talking about nurses who worked hard in COVID wards, teachers who adapted to remote learning, and small business owners who fought to stay afloat through tough times. They bought these homes because they earned the right to enjoy them. And now they're staring down the barrel of financial ruin, and it's not even their fault. So here's the deal. If you bought in these markets in 2022 or 2023, you've got some tough choices ahead. You can hold on and watch your equity drain away, sell at a loss, or consider a strategic default. None of these options are great, just slightly less bad. But hey, remember that real estate cycles. Nevada has seen crashes before and pulled through. If you can stick it out, keep up with payments, and actually live in your home, not just treat it as an investment, time might help you heal those financial wounds. For those of you waiting to buy, your patience is about to pay off. Just keep in mind, don't celebrate the misfortune of others. These people are your neighbors, friends, and family. A housing crash means tough times for everyone. Jobs disappear, businesses shut down, communities can break apart. What's going on in your market? Are you noticing price drops, having trouble selling, or finding some good deals? Let's talk about it. Drop a comment below and share your experience because we're all in this together, whether you're a homeowner, a renter, or hanging out on the sidelines. Hey there, I want to chat about what's happening in Nevada's housing market. Right now, we're seeing some serious issues. The big question isn't really if the market will crash. It's already in the process of crashing. What we're trying to figure out is whether this is just a correction or something much worse. Are we looking at prices dropping by 20% or maybe even 40%? Is this just another cycle of boom and bust, or are we looking at a situation that will completely break that cycle? For those of you who bought homes at the peak, I totally get it. You did everything by the book. You worked hard, saved up, and made those big purchases, and now it feels like market forces are just wiping your wealth away. It's really tough, and it doesn't seem fair. But just a reminder, Homes are so much more than just investments. They're where you make memories and build your lives. That value is hard to put a price on. Right now, the Nevada housing market is on the brink of some serious trouble. We're expecting some parts to drop by 20%, others maybe even 35%, and a few might lose half their value. This isn't about scaring anyone, it's simple math. There's an overwhelming supply and collapsing demand, so prices are headed only one way, down. The big question is how low they'll go and if you're ready to jump in when they hit rock bottom. You know, every crash brings opportunities. For those who have cash on hand, who can wait it out, and who have the guts to take the plunge, what might seem like devastation to some could turn into the deal of a lifetime. The cycle will turn back around eventually. It always does. But for now, we're definitely facing some absolute devastation.